Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Let me state something that I fervently believe. I'm pretty sure it's about as close to fact as we can get in this crazy world of money. Hi, I'm Don McDonald. Along with Tom Cock, we're talking real money. And investing really is, at its core, way, 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 way too simple to be this complicated. Wall Street goes out of its way to make you think this is a complex business that you need their special skills to navigate.
Which leads to today's lesson.
Oh, here's what do all of you want? What do all of you want? What do you want? What does every investor want?
High returns and no risk.
With no risk. Thank you so much.
I also want a lot of yield with no risk. Just send me my check every month.
Well, that's a high return.
Yeah, okay, fair enough. So
you want a big check every month. And what would you do? What stupid thing would you do to get a 7% return every single year on your money?
I'd have to really think about it, because 7% is so outlandish in today's world of 1.5. I mean, Jason Zweig says 2, but even that is. I mean, the 10 years still 1.4 or something, so not much.
Yeah, you got to go out to 20 years to get 2.
So
with absolute safety.
Yeah, well, but here's a nice little exchange traded fund on the 7 handle that's without a E in there, handle, that's paying out. No, and they have paid out since 2018, 7% a year. Bingo, bango. It's easy. Mm-hmm. Very easy. They hold 19 exchange traded funds. Half of those are stocks and half of those are bonds. They have about $1.4 billion under management. One guy who's an investor calls it a nice little recycling cash machine. So he must have a machine in his house that's recycling cash.
Yeah.
So tell us how they.
You know how we speak of expense ratios, right?
Yeah. How much?
Well, the stated expense ratio for the fund is 1.2, but they're eating some of that because they love you.
Oh yeah.
The investor.
Just thoughtful.
So
people.
they're only charging you just a smidge under 1%, 0.97.
Okay, so what is the sorcery that they've come up with to pay out 7% in an interest rate environment of, we'll be generous and say 2. How do they do it?
That is really interesting. It's very similar to the way we tell you can get maybe 4 or 5. And that is to build a portfolio that's well diversified between stocks and bonds. Mm-hmm. And then you take out from those assets a check every year or every month to make that 4 or 5% a year. But they're doing 7. It just, all it means is that in a bad year, this is going to get drawn down. And the problem is with this fund, you've got no history. The thing only goes back to 2018.
Oh, 3 years isn't enough? 3 years is not enough?
Barely goes back to 2018.
Okay.
I think it got started right at the end. So let's say basically we're just reaching 3 years, and it's 3-year average annual total return.
That's the important number here.
Total return is 11.91. So they've been able to pay out a 7 on average.
Yeah.
Because they've overall added about 5 to that in the growth of the portfolio. But what happens when the doggone thing goes down?
Yeah, and they point out
when the market goes down.
Yeah, February 19th to March 23rd, 2020, fell by 20%. You still got your 7%, though? Still got my 7%. Mm-hmm. The author of this article, someone we know, Jason Zweig, wrote that earlier versions of so-called managed distribution funds have tended to shrivel in value over time because they're going to keep sending you that 7%. It doesn't matter, right? I mean, you're going to the 7%, 7%, 7% until they don't got the 7% anymore because they're going to just reduce the value. They're paying you back some of your money. They're also using leverage, and they have a lot in stocks that over time can go down, right? We really haven't faced a long bear market in over a decade.
And here's the thing is that this is a fund of funds. Mm-hmm. They own ETFs. So they're really not going out and buying securities. They're buying securities of securities. And if they were just getting into some plain vanilla stuff, I'd probably be okay. But they're also playing some hedging ETFs.
Yep.
For example, like the Global X MLP ETF. Now, that sounds confusing, doesn't it?
Is that master limited partnerships?
Well, yeah, it would be confusing. And it is like last year, 2020, that one fund lost 34% in 1 year. So this is kind of a crazy portfolio. I want to talk a little bit more about it, but I also want to remind you the phone number is 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Your guides to a really great financial future.
Sorry, Dave dropped.
Tom and Don are talking real money.
Hey there, welcome to the show. I'm Don. That's Tom. Dave came back. Then
Dave, we're so sorry, but if you call right now, we will put you on the air right now. I mean, the guy hung on for...
because I'm going to get totally in another topic and then the heck with it.
No, I'm going to interrupt you. And Dave, if you call right now, you're on. So he waited forever.
Actually, I have total control over Tom's audio, so I'll just turn him down.
And everything else for that matter, too.
855-935-TALK. Call us. It's free. It's easy. We want you to manage your money better. We really do. And that's one of the reasons why we warn you about things like this 7-handle thing. One, the expenses are ridiculous.
Yes.
Two, it's doing all kinds of crazy stuff. They even have a covered call writing fund in their portfolio.
You want to even explain what a covered call is?
They're just throwing stuff against the wall to see what makes 7%. For those of you who have not played this game, I actually did play this game in the 1980s.
Yeah.
I was a covered call writer for a while. Thought it was a really slick way to make a steady income until it wasn't.
Mm-hmm.
It always worked great right up until it didn't. Well, it worked great. What you do is you buy stock. Then you sell someone else the right to buy it.
That's right.
At a similar or slightly higher price at some date in the future, somewhere between 3 and 9 months. So you got to know the
price
usually.
And the date.
You're right.
Yeah,
so, but that's, you don't have to know those. They do on the other side.
Yeah.
Here's the deal. If you have a stock that doesn't move very much, you can sell somebody a call to buy it at a slightly higher price. And if it doesn't rise above that price, then you keep the stock and the money you got for the call option, which is usually pennies
a little bit
on the dollar,
mm-hmm.
couple of pennies on the dollar. But here's the bad news. You got a stock that does, really, 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 really well. It just like spikes up. You have to give it away. You have to sell it to them for that strike price. So like a $25 stock and you got a $30 strike and it goes to $40. Well, you still got to sell it to them for $30.
Are there no craps tables? Are there no one-arm bandits?
Well, this is actually really the opposite side. Covered call writing is like being the house, but it's not that lucrative because the more volatile, you have to have very volatile stocks to get decent premiums on the calls, and very volatile stocks get called away. So, yeah. It's not a game, and it's really complicated. And it used to be, the commissions were killer.
Oh, I'm sure.
They would just eat you alive. Yep. The commissions would eat you alive. So give us a call, 855-935-TALK, or send questions in at talkingrealmoney.com. Like this
Yes, please.
I'm having a baby.
Congratulations.
Not me. I'm way old and of the wrong sex. But I'm having a baby and would like to start a college fund. Mm-hmm. What do you think of the Washington GET program? Maybe a Vanguard 529 plan? I have a lot of money. Oh, this is kind of another question. So I'm going to stop there, and then there's another question.
Okay, the Washington GET program, you can only use the money in Washington schools.
That's a down.
So yeah,
that's a detriment.
not a fan. I mean, and it also pays for credit at those schools, right? Rather than that's different than a 529 where you put the money in, it grows, you take it out tax free for educational expenses. So there's a difference there. I'd rather take the latter than the former. That's just my personal preference. But
I would too. I'm with him. And the Vanguard has fine 529s. I don't know which states. They got them in the number of states.
Utah, right?
Including Utah.
Yeah,
Including Utah,
which
is one
if
we
you type in
There's a
Utah
bunch.
529, it'll show up. And you can use the money in any state. So it doesn't matter.
Correct.
Yeah.
Correct.
Yep.
And then it continues on. She goes, I currently fund my Roth through the American funds because she rolled over a bunch of money to American funds years ago.
Yeah.
She says, like, I get a discount being over 100K. Basically, she means she's not paying the commission.
Yep.
Because she's hit a break point,
Yep.
so she's not
Break
paying
point.
the commission anymore. Even though I get a discount from them, I still have to pay the full fees. Would I still have to pay the full fees? I would still have to pay the full fees with a 529 through American Funds. So I'm looking elsewhere.
Don't. Why would you do 529 through American Fund? No reason to do
no,
that.
That's why she should look elsewhere.
You can get age-based programs for darn near nothing now with funds that are really cheap.
Can I tell you a little something about, even though you got over $100,000 with them and you think you're getting stuff cheap, you're really not getting stuff cheap because, as we mentioned in the previous hour of the previous podcast, for example, the American Funds Growth Fund of America charges 0.6% per year. And
yesterday, Vanguard just lowered their fees on some of their ETFs to 0.04. Dimensional funds reduced their fees on their ETFs by 13%. So you could buy the equivalent exchange traded funds for, I don't know, 1/10, 1/20th, cheap.
Less than 1/10.
Yeah, I mean, it's crazy.
Less than 1/10
Why would
of what
you
you
do
pay
that?
the American
That
funds.
doesn't make sense.
And what that means is if the two funds do identically, and by the way, the Growth Fund of America over 15 years has underperformed the S&P 500 index, underperformed its benchmark, which is a little more aggressive than the S&P 500. So it has underperformed over long periods of time. Recently, it's overperformed, but that's more likely attributable to luck than skill.
Yeah.
Therefore, if all things being equal, if you pay 0.55% less per year, that's going to increase your return, 0.57%. That's going to increase your return by 0.5% a year.
Right off the bat.
Right off the bat.
Yeah,
so I would get out. I know that you really like the person you work with at Edward Jones.
We just had that discussion.
I'm betting you it's Edward
really
Jones.
Nice
I'm just betting.
person. Oh yeah, because they use American funds like.
Oh man, they're like the biggest for American. I think. I really do. I think they probably sell more American funds than anybody. 855-935-TALK is our phone number. 855-935-8255. And Steve, you're next.
Hey, Steve.
Hi guys.
Hey, Steve, what's up?
Quick comment / partial rebuttal to your mention of using covered calls for income.
Yeah.
You mentioned 9 to 3 months. If you're going to try to use covered calls as a strategy for income, which I'm not necessarily saying is a really good idea, you have to do it short term. You have to do the weeklies 1, maybe 2 weeks out. Because like you say, if you try to buy a longer strike, the probability of it going up enough to basically take away your advantage is way too high. So you have to go really short on the strikes if you're going to try to make income.
Yeah, but if you go really short on strikes, you're getting teeny tiny, almost non-existent premiums.
Absolutely. Premiums are really small. I was going to say, I'm not saying it's a great idea, but if somebody wants to try it, you've got to think small amounts and short strikes. Otherwise, like you say, it just doesn't work long term.
And it is a very active, very busy game. It's only for someone who wants a job.
You have to pay attention to it a lot, like hours a week.
Yeah. I talk about making yourself crazy for a tiny return. And it is a relatively tiny return. When all is said and done, covered call strategies usually have historically overall returned about somewhere between 2/3 and half of the equities, the underlying equities.
And we'll be back with more covered call talk here on Como Radio. We never miss that on Saturdays. Join us each and every Saturday.
No, it's an important topic.
Sure.
No, I mean, it is. I mean, people think about doing it. We'll be back.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at vestory.com, vestory.com.
For your real life and real future, Tom and Don are talking real money.
Hi, welcome back. It is not covered call.
Next week on Derivative Day, we'll join our...
He was just making a point.
Okay, the point is, that when we talk about this, people
but
believe...
it's not a game anybody we believe should
People
play.
will hear it, and they'll say, well, I heard Don say about covered... No, he's not saying to go do it. Not.
Mm-hmm.
So, we don't do it. By the way, members of Congress shouldn't do it either. Members of Congress should not buy individual stocks either. I don't care which side of the aisle you are on. That is a bad thing for them to do. They can own a very nice mutual fund or exchange traded fund if they want to be part of the capitalist system. So there's my political
855-935-TALK is our phone number.
Sorry.
And Cass, you're next. Welcome to the show.
Hey, guys. Thanks so much for taking the call. Really love the program. Hey, I got a question.
Thank you.
Yeah, you're welcome. We've got a rental property that we're trying to decide on whether to sell since the prices are so high right now and looks like a good time to sell. Keep, and then if we sell it, we're trying to figure out if we should try and roll the money over into another property, or since we've owned it for 4 years, just take the hit and on the taxes. And just appreciate your guidance on that thought process.
Okay, so my first thought process is owning a rental property is like owning a business. I own a couple of them. I like being in business. I enjoy it. I don't mind going on vacation, dealing with the things that come up when I'm on vacation. Do you like being in the rental property business?
No, because I have another career outside of that. I mean, it's okay, but I don't know if I want to turn it into if we want to turn it into a business. And
well, it already is kind of a business.
Yeah. I'm sorry, say again?
I said right now it already is basically a business.
Yeah. And the other thing is the property is kind of a distance from where we live, and I've been managing it myself. And so, it would be nicer to have that same business a little closer to home. So,
no, but okay, I'm going to stop you there because you just said you don't want to be in that business. And there's two reasons I would be selling if I was in your three. Number one, you already said I don't want to be in this business. Number two, prices are very high. I have no idea if they'll stay high, go down, whatever they will. Number three, believe it or not, tax rates on long-term capital gains are very low right now and may go up in the immediate future. I don't know. For those three reasons, I would say sell it. I would not do an exchange and take my money and invest it.
Plus, let me tell you, if you want to be in real estate, the best way to be in real estate, and even a lot of people who started out buying individual rental properties came to this determination. There's a much better way to be in real estate, and that's called a real estate investment fund.
REIT. Trust.
A REIT fund.
Yeah. You can own that.
Because you're going to own a lot of real estate, and it's really close. It's as close as your computer. It's right there. The price is right there, and you don't have to do anything. You don't have to file any fancy tax returns.
The toilet never breaks on the weekend.
Well, it breaks, but somebody else is fixing it
That's
for
a good
you.
Point.
Thanks for the call, Kaz. We appreciate it. 855-935-TALK is our phone number, 855-935-8255. Love hearing from you, talking to you about your money situation.
But I think that comes up a lot. People are like, well, should I keep it or should I get rid of it? And I think truly the answer is lifestyle. You want to do it or you don't want to do it? I mean, if you don't want to do it, then get your money, invest your money.
But it's not a passive, and those
passive.
who call real estate a passive investment
ridiculous. No, it's not.
Are out of their ever-loving minds.
It is a business.
It is not passive. No. You've got to work your tail off, even if you hire, and people say, well, I just hire a management company. Okay, well, yeah, now you're turning over 10 to 15% of your revenue to the management company, and on top of that are your income, and then on top of that you still have things you have to deal with. The air conditioner breaks. This is a Florida problem. I'm sorry, not a Seattle problem.
Not today.
The heater breaks.
For sure.
You got to pay that. The management company's not going to cut a check for that.
That was just plain mean, too, by the way. I got to say right now.
My AC is running right now.
Just plain mean, man. You're a mean
and I've
man.
got to replace my AC soon, which really bums me out. I found out I need to replace it again for the second time. And, oh, by the way, I contacted Costco.
Oh, we're going to talk about this now? Yeah.
They have the Costco, you can get AC through Lennox, get a discount thing. The company that came out tried to sell me a different brand. So they didn't have to pay back. I'm sure they have to pay a portion of the rebate.
Absolutely.
And so they tried to sell me a different brand. And then I said, no, I'm not going with that brand. That's junk. And he goes, well, the kind you want, the really high efficiency Lennox you want, you can't get that. It's not available. It won't be available maybe for years. And so I'll send you an estimate. Send me an estimate. He goes, we found a unit in stock, but it's a low efficiency unit. But low efficiency units, they're not much different. And it was ridiculously expensive. And so I contacted Costco, and they said, we only have one person per market. You're stuck. So Costco, not the best job in my market.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
Reality radio for a really great future. We're talking real money.
We want to talk about money with you here on the Talking Real Money show. I wanted to make
the
it
last
rhyme,
show, by the way,
good.
the last live show of 2021, and
Definitely not the last show.
no,
just the
and
last
we're still
live
looking for Dave.
Saturday show.
Dave called a couple times. He disappeared a couple. So if you've seen Dave, tell him call us. We're waiting for his call, please.
Dave, don't do that, Dave. Please, Dave. I'm sentient, Dave. 855-935-TALK. That's our phone number. Give us a call or send in your questions at talkingrealmoney.com like this one. I do agree that self-directed IRAs are not appropriate. Remember when we talked about those and the people who had the gold in the safe in their house?
Yeah, with the IRA, and their IRA, and then they took some out, and what a mess.
Yeah, fined by the IRS.
Really?
They're not. He says he agrees they're not appropriate for 99% of people.
Oh, it's
And he
always
said it's
okay for me because I'm smart, right? Yeah, okay.
It also makes no sense that the couple tried to put physical gold in a self-directed IRA. However,
Here we go.
you guys do not give gold its due.
No.
I think physical gold should make up a small percentage of one's portfolio, 3 to 5%. I think there is compelling historical evidence on this subject. Paul Bellinger runs a website, Evidence-Based Wealth, and he has many articles and videos that are very informative on why small allocations to physical gold make sense in many different portfolio situations. Keith Warner has also written a great many articles on the importance of small allocations to physical gold as well. I think this is one area of portfolio theory that you guys gloss over. I barely ever heard you guys mention the topic of physical gold ownership.
Well, I own some gold. I gave it to my wife. She's got it. She wears it sometimes.
I got some.
I got one.
I got some right here on my finger.
I got one on my finger. By the way, this wouldn't be just our opinion. This is not Don and Tom's ideas. If you go read the people that I think you should read,
yeah,
they're going to tell you you don't need it. They're going to tell you, why, to what end. So I guess what you're saying is, if you have a big portfolio, a lot of stocks, bonds, et cetera, this should be in there somewhere because it adds what? What is it going to add?
Well, and this guy, Paul Bellinger, that he quotes, who has this website, Evidence-Based Wealth, his argument for gold is based on charts. It's based on technical analysis. It's not based on any kind of solid evidence that gold has outperformed as an investment, which, by the way, that's the evidence you should look for. Has gold performed well as an investment? Given the fact that gold does not create wealth, it cannot create wealth in and of itself. Again, put a hunk of gold, put my wedding ring in a room, leave it there for the next 20 years. How much bigger will that piece of gold be?
Not a lot.
Amazon built a warehouse 20 years ago, and now how many warehouses do they have? They're definitely bigger.
Right.
The argument he makes is this whole spurious, the U.S. dollar is going to depreciate.
This is the end of the world.
Stuff.
I got gold.
Yeah. But the reality is, let me just give you. You ready? You want some real numbers? Real numbers. What's a 10-year approximate return for global stocks?
10-year? I'd have to look it up.
I'll look it up.
I'll bet it's
I'm gonna look at
12, 13. It's been good. I mean, you mean since the crisis?
And that's a very the world stock market is a very volatile thing.
Yeah. Moves up, down.
It moves up and down a lot. Gold is also, despite people's statements that it's safe, gold is not safe. It's really volatile. And who's to say it's going to be worth anything in the future? Because we agree? What does that mean? It's like your fiat dollar. We agree it has value, but who agrees that gold has value? Same people. 10-year average annual return for the Vanguard Total World Stock Index ETF, 12.09%.
That's pretty close. Yeah.
You're pretty close. What's a 10-year average annual return for the
GLD?
The Spider Gold Shares, GLD?
I'll say 7.3.
Well, you're 10 times high.
That's it?
10 times high.
0.73?
0.78.
Wow. So less than 1% a year. Wow.
Less than 1% per year. Now, why would anyone put that in their portfolio except as some insurance against catastrophe? That is the only argument I ever hear for gold.
Okay, but let's take that to the next step.
Yeah.
You have gold, the world comes to an end, and you have gold for what?
Eating.
Oh, I see. You
No.
shave it off carefully and swallow?
Yeah. Does it start fires? No. Can you drink gold? No. Maybe you could turn it into really expensive bullets, but lead's cheaper. It's a terrible idea in our
And
opinion.
Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com. Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
We are the Money Guys here on the radio and on our podcast,
We're kind of
which
grinchy
is on all
for
the major
Grinch
podcast services.
Yeah, you can get
We're gold Grinches.
Yeah, we were Grinch on the Handle product. We were down on the bad advisor.
You were
negative.
a little grumpy on the covered call writing.
Yeah,
I'll give you that.
Okay, so let's be positive and let's go back to the phone, see if we can talk to someone about something good.
You're going to be grumpy again.
Probably.
You will. Your temper is short. It's like he said, his fuse is short today.
Apologize. It's the holidays.
Mike, Mike, welcome to Talking Real Money. Be nice to Tom.
Hi, Mike.
Okay, I will. Thank you very much for taking my call, and happy holidays. I have a question about a Roth conversion and an RMD. I will be taking an RMD in a few days, and I was thinking about a Roth conversion for the remaining amount of money, or for a portion of the remaining amount of money in my IRA. I realize that that'll kick me up into another tax bracket. The question is I've gleaned all the information I can, and I can't find. I thought I read that you must take the RMD before you make that conversion. Is that correct? I know that there's been a lot of changes, and due to the Teal effect. So anyway, I'll wait for your answer.
Yeah, I'm not aware. First of all, thank you for your kind note about the holidays, and the same to you and your family. I'm not aware of one impacting the other. Because, and I don't think there's any date around, because I think you can convert anytime during the year. You still have to take the required minimum distribution. They're back on this year after being off last year. And of course, with the other change that they moved back to 72 rather than 70 and a half. So, I mean, I think you can do both. I certainly wouldn't move up to another bracket if I was doing a conversion. In other words, and what we're talking about here is moving money from a pre-tax account, IRA or 401k, to a post-tax Roth account, paying the tax on it, then it gets tax-free growth from that point forward. So I'm not aware of any entanglement there between the two in terms of the timing. And you can take the RMD right up to the end of the year.
Exactly. I don't think it affects it. Well, you don't have to take the RMD first, from what I'm reading.
Yeah, I'm not aware of that.
The reading I've done. I'm not. I agree with Tom.
Okay. Thank you very much.
Yeah. Oh, thank you.
Thanks for the call, Mike. 855-935-TALK. That's our number, 855-935-8255.
Roth conversions. Yeah.
Yeah, I can't remember ever.
I don't think there's one in one, the timing of either one, but I hate it when I say stuff like that and then someone calls me out on it because there's always those little tiny, especially Social Security, et cetera.
Particularly when you're dealing with, tax law. Oh, my God.
Yeah, I mean, and by the way, speaking of tax law, aren't we all glad that you remember a couple months ago when all the
Did something
bills,
happen?
Well, yeah. Well, nothing happened. That was the point.
Oh, yeah. So
all
far,
the articles.
Yeah.
Think of all the paper. All the screenshots, all the information about how different it's going to be in 2022 for your taxes. And how different is it going to be?
Not much.
Not much.
Not
I
any.
mean, it's like you got all worked up. So, I mean, I think we do say this on the program from time to time. Don't speculate on what tax law will be, except what it is, because that's all you're ever going to know.
Well, and let's just carry
silly.
that to its ultimate end. Don't speculate on anything
that's
that
true.
might be.
Yeah, right.
Just deal with what today is. You don't know. It's like the argument for gold. Well, but the dollar could. You don't know that. Yeah. You like to believe that would happen because somehow it fits with your worldview.
That's true.
It strikes me sometimes that people have a worldview that actually requires Armageddon for them to be happy. I am not going to be happy until the whole thing falls apart.
Isn't it just enough that you have a bad football team you support? I mean, come on.
Both sides of the political spectrum.
I agree. Yes, I
far
agree.
right and far left. There are people who want to see the world just come to an end, and everybody just go away. And the funny thing is that they always see themselves as the only survivors of that apocalypse.
Good luck with that.
Oh, speaking of apocalypses, I am dying to see Station 11.
It is the holiday season, after all.
It is the holiday season. And what better time of year for an apocalyptic? It strikes me strange that HBO put this thing on. It's a post-apocalyptic story. But
you read the book.
And the reviews were like, this is the most upbeat apocalypse I've ever seen.
Everybody's dead.
It's not a comedy.
You have your
it's
gold
a drama.
still. Yeah. Okay.
It's not it's a drama. No, you'll pretty much find out. Watch this. I read the book and I loved the book. It sold 1.5 million copies.
Which nothing sells 1.5 million anymore.
But you'll see why gold isn't going to be worth anything.
So this is
literally this show. It's on HBO Max.
Okay, yeah.
This show will show you exactly why, in an apocalyptic scenario, gold doesn't matter. More valuable than gold is a musical instrument.
And is this like a virus kind of thing? Like
it is absolutely a virus.
Sound familiar in any way?
Oh my gosh, it's absolutely this horrible virus that kills off far more of the population than COVID has. And I tell you, the book was extraordinary. And here's something you never see. And this has nothing to do with money. We're just talking. It actually has 100% fresh on Rotten
You
Tomatoes.
told me that. I've never seen that. Well, Chevy Chase's Christmas Vacation. That might have 100.
That's not 100%.
Planes, trains, and automobiles. I'm just giving you my ratings. Those are 100% for me.
Oh, okay. I'm talking about critics, not.
Anyway, so
I don't pay much attention to you.
Well, your life will be better for that. By the way,
I mean, The Power of the Dog only got 95,
which I really liked. Is that 95? You've seen, right?
Yeah,
Did you ever watch it?
No.
Oh, that's a good film.
No.
Power of the Dog. Yeah,
my wife doesn't want to watch it.
Oh, why? Why?
Because she thinks it's a Western.
No, it is not a Western. There's no shootouts.
It's set in Montana.
It is not. No, it is not a. Yeah, okay. It's set in 1920s Western Montana, but it is not a Western. No, it's not a Western.
All right.
So,
thanks.
Just a great film. And okay, so I will take you up on Station 11. I hope you have. And we don't usually do personal stuff on the air, but I hope you have a nice holiday.
No,
it's going to be kind of a strange one. We're still trying to figure out who we're going to get together and all.
I know. We're having the same issue.
I don't know what to do. We went the COVID thing, and now everybody's better.
I'm taking the week after Christmas off.
Good.
So, by the way, just programming note for those of you listening to the podcast, that whole week will be best of podcasts, but you won't have heard them before because they've been tucked away in the archive for so many years that we forgot what we said.
I hope it's not. I hope it's still relevant.
I hope it's still relevant. So you'll have a lot of best ofs, and then we're back here on January 1st.
You will be back in town for that one.
Well, I don't think I'm going anywhere.
Oh, I see.
Now.
You're just locking yourself up in the house and doing the bucket
list. I thought about going to see my mom, but now that she's in New York City, and you see what's going on there.
What a mess. Yeah.
You want to go to New York right now? No. Do I want to go anywhere right now? No.
Yeah, your little room is safe.
I thought maybe we should go to a movie, and then I went,
movie?
No.
Yeah. Plus, other than West Side Story, what's showing? Come on. Spider-Man?
Yeah,
I think so.
There isn't anything. You're right. The best stuff is on your TV at home.
Indeed.
I watched King Richard last night. That was great. We'll be back.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
And
speaking of
as
getting
my grandmother
together,
used to say, speaking of getting together, good Lord willing and the creek don't rise, we're going to be getting together in Bellevue, Washington on the 26th. We're hoping that all of you are going to get vaccinated.
And
you have
wear
to be
a
vaccinated
mask.
to attend. Because this is going to be our big event. We do one of these almost.
Well, no, we've done them every year.
We did every year.
Virtual last year. It'll be virtual too if you don't want to come and see us in person. Retire Meet is the event. We've done this is the 8th event. Covers all the aspects: housing, estate planning, Social Security, income, investing, all that stuff. One day. It's a truly wonderful event. We've got Apollo Lupescu back as a speaker.
RetireMeet.com. We got to go.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial product or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.